Hello everyone, welcome back to the TraderLion channel. This is Richard and Ross, and today we'll be starting our chart of the week series where we'll be basically highlighting one stock chart from Ross's top 10 report. And basically that's an exhaustive report every single week where we talk about market analysis, and Ross also gives us his best ideas going forward. So today we'll be talking about AFRM, a stock that's been holding up really well during this general market pullback. And Ross, just give me a quick and short answer about kind of what you're looking for in a chart at this given time.
Okay, so as we well know, for the last few weeks or so, we've seen weakness in the general markets, and this is the time where the leadership, the true leaders, the new ones will really tend to stand out. These are the ones that the institutions are picking at while the market's weak, and why you will see, as Richard just pointed out, as you have the S&P selling off here, you've got a stock like Affirm moving up against it. So that's where you're really going to see the relative strength in this stock, much more so than its relative strength line. There are, if I remember correctly, and it's not a thing that we find very often, but if I remember correctly, making the top 10 report even yesterday, there was maybe 3 situations or so where we have relative strength line making new highs ahead of price. That's not something that pops up often. So when it does, I take note. It's a very relevant sign of power. So I hone in on those stocks immediately, and from there, obviously, I want to see the ones with the best can-slim fundamentals or the most solid story. You know, the one that's changing the way we work, the way we live, the way we communicate, or is, you know, disrupting a particular sector or industry group.
And Affirm obviously isn't doing RS new highs before price here, but it is holding up double inside days, holding above the 23 EMA. And it's got that positive divergence with respect to the market. So it's showing relative strength in another way.
Exactly. So this one, just like you said, and yeah, so what both is nice when you've got the big positive divergence along with the relative strength line. My guess is this relative strength line was talking to us way earlier. Yeah. And now it's, you know, consolidating as the stock as we see, has been ultimately finding support above its 10-day moving average, except for a couple of days where we closed below. But it's, you know, like you mentioned before, we've got amazing power here between the gap ups and the way the stock is held, especially in the face of a super weak general market. So, you know, we know, look at this one, Affirm's industry group, top third of the database, is nice to see. Obviously, we're not looking at current earnings, are not
there yet.
What's got us here, as you can see, we just got our first quarter of positive earnings here, because we're going from a negative to a positive. We have an NA, but I think we can all realize that going from losing 52 cents a quarter, you know, the same quarter a year prior, to earning 14, that's a huge difference. And you can see also, if you look at earnings estimates, going out, we're showing a move towards positive. We're not there yet. What we're looking at here, this is more of sales or revenues play. So you can see revenues here have been growing at a pretty speedy clip. So as long as that's going, and again, so at the workshops that I, you know, teach with Bill O'Neill, what I would tell those people is, you know, in cases like this, if it's okay that it's missing that one thing, right? As long as we have the sales story and it has everything else going for it. And so far it does. We're not looking at increases in sponsorship, but we've got solid sponsorship. We've got one big fund working its way in. And of all of the new, you know, we're looking at a new stock that has just formed a big, beautiful IPO base with showing super power up the right side. If Ray were here, he would be pointing to this volume right here. That's your highest volume since the IPO. That's significant on this gap up, and all of his action since is saying, watch me, if not buy me, right? That gets a little tricky. The deck is cold right now, but if you're the shorter term guys that don't
care too much about the market direction.
Exactly. They're in and out quickly enough that the general market is not as much of a concern to them as it is for someone who's trying to build build a position. The chop in the general market will certainly matter to how that all works. So yes.
Perfect. And just giving my take here, yeah, this is a beautiful chart pattern. It's its first nice long-term primary base below the 146.90 level. And let me actually bring up my Zoom annotation tools here. We can draw this pivot in here, and it's moving up really strongly at the right-hand side. Two huge gap ups with good closing ranges. And it's just kind of announcing itself that institutions want in no matter what the cost. I'd also like to point out that in addition to these huge gap ups on earnings, you've got a steady increase in the basically the moving average on the volume, which just shows basically an increase in institutional interest in this name. So that's two things that point out. And Ross, why don't you talk about kind of what you're watching in terms of the top 10? What kind of entry point are you looking for? And also, how are you managing risk?
Here's what I'm thinking. This is your safer, more textbook point on the chart, what we've got marked there. However, in a stronger market, and who knows, maybe we'll start to see signs of that happen on Monday, but for now, I'm not, so this isn't, this is a very short-term declining tops line, but just the point that we do have maybe a little bit of resistance there. I mean, you could really sneak your way in early through this 121.25. And if you were trying to, play that game of, I'm going to try and work my way in and jump out and in until you, kind of find a spot. And, because this is all early in here, like you're saying, ultimately we're going to hope for one way or another to get through this all-time high and hopefully double, triple or more, right? I mean, that's what we're looking for. It's always nice if you can get in early up the right side, and hopefully by the time you're buying at these levels, you're pyramiding your, the end of your position, or it's working so well for you, you buy an extra 10% with the plan to, this is an advanced and definitely riskier way to do things, but, you overbuy by X%, assuming, that momentum carries you through, you sell it, you reduce your average price. And that's that sort of trading around your core position thing that so many of us do, including myself. I've got a hybrid of position / swing trading where I'm trading the same stocks, I'm holding positions in, I'm just swinging around my cores, hopefully reducing my average and not hurting myself. So that's one way to do it if you wanted to try, and you can pick a low, maybe this low here, and I'll tell you, so these tough ones, buying on strength, you've got to realize how wide these ranges can be. This is all the stuff you've got to take into consideration. Understand that, when you buy X size position and do your stuff, like Ray is always talking about, do the math. Think about, give it serious thought, look to the left. Are you going to be able to sit and hold that stock while it potentially is acting normal on its pullback, but still, it shouldn't make you want to throw up. And, if you've got 4 or 5 other stocks and you're in, that's where the strong market becomes becomes a huge help, and help. So when you're fighting that market, I'm hesitant to buy on pullbacks, just because I'm not a fan of buying in weakness as the market is weakening with no signs yet that we're really going to turn back around. However, on the flip side, I would say this, Richard, there's a ton of stocks like Affirm out there that look significant, that are showing a much more relative strength than the major indexes, especially the NASDAQ and the S&P. We are seeing that small cap index, right? Russell 2000 hold up, as you and I were discussing. There's they are smaller cap companies, but there's good growth. There's still some good growth companies on there worth paying attention. So the undercurrent of just the fact that there's so many leaders with potential still holding up. I give the Russell 2000 a lot more credibility, I guess, let's say, than the Dow Jones. I think, it's much more relevant to what we're doing. So that I believe that the market is the ultimate discounting mechanism, right? So if you want to, yes, you want the market working with you, but ultimately I have found it's a big takeaway. One of the big takeaways I got from working over at William O'Neill and Company is watch the leaders. I say it all the time, watch the leaders, watch the leaders, watch the leaders. The action of the leaders will tell you what the market is going to do. It's not the other way around, necessarily waiting for the market to do. By the time the market's making you feel warm and cozy, a lot of these stocks are gone, right? So it's that delicate balance of understanding yourself, your psychology, where the market is, what's working, and if you're going to play.
Managing risk,
how much aggravation are you willing to take on given what's going on in your life right now? People won't talk about that, but if your kids are driving you nuts, maybe you had to sleep on the couch last night, whatever it is, don't put a lot of pressure on yourself with the stock market. I mean, I'll tell you personally, I tend to wear my emotions on my sleeve. My biggest problems losing money have been for things like that, not because necessarily I was breaking rules like I did when I was learning, and I certainly got beat up in the beginning like so many of us did, but it's those sort of things that have really affected my performance more than anything, not forcing myself to trade against my psychology at the time, and not really doing my math. And when things got bent out of shape, trust me, you're going to panic and get shaken out of everything if you're not prepared. So,
and Ross, can you talk about if the market really firms up and we see positive action here across the board from the leaders, how would you manage risk in this name if you did decide to take up a position?
Because it has such wide ranges, my tendency is gonna be here. We can see it's holding that 10-day average on a very short-term basis. My thoughts are this: if we do break through here, for me to buy it early through this line, volume would have to be clearly enormous. Like you'd have to be able to look at it early in the morning and go, oh, is it just jacked up because it's the first 15 minutes of trade, or is this going to be huge? If it's not, I'm not in a rush to buy anything early. If the volume is clearly huge and I have an opportunity to get in, here's my feelings. And I still want that volume to be enormous. If it's actually going to work at that point on strength, right? Because let's say the market is starting to come around and you want to put on a partial of one big leader and get a feel for the market, whatever it is. I personally think stock should hold its 10-day moving average as it has been for the most part, right? So this is as the market was at its weakest. We got a couple slight closes below. So if the volume is screaming at you and you have the opportunity to squeeze your way in early through 121, all the power to you. Otherwise, again, volume's always got to be there. So as we can see on the label we have marked here on the chart, we can buy through 121.25. And as I was discussing, if you want to keep your sell stop super tight, you can use that 10-day moving average on a closing basis. You can see even when the market was at its weakest, it barely closed below. So if we're going to get the kind of power that, should push this thing higher, my thoughts are the 10-day should really contain any pullbacks if we're getting the kind of power that we should be. Otherwise, if you wanted to give it a little more room, right at the you'll notice 112 here keeps us within that max stop area. We're still, within a first stage base, and there's, support down at that 112 area as well. So depending again on your risk appetite, how you tend to do things, you can use either one of those would be fine. And you can also here notice that 21-day and 23-day will be catching up rather quickly, so that those will become more relevant over the next few days, unless of course everything falls apart. But assuming we continue higher, those moving averages will catch up to support in a hurry.
Perfect. We'll leave it there. Affirm, definitely want to watch from the top 10 report. Once again, if you want more info about the top 10 and want really Ross's in-depth market analysis as well as his top ideas, the link will be popping up right now and down below in the description. Let us know your thoughts down below on this new series idea. And if you've got any stocks that you'd like us to cover in the future, let us know as well. But with that said, thanks again for watching, and we'll see you guys in future videos. Thanks.